All right. Any of you guys and girls that have been following me on Twitter will see that I talk about ducks in a barrel type trades as being my favorite. And if you're not familiar with that term or that saying, it's the saying goes, it's as easy as shooting ducks in a barrel. So this strategy that I find is the easiest, I've talked about on Twitter a bit. I just thought I'd do a video showing very recently how it's playing out. So basically, the concept is you find a trending market. So in an uptrend, you're looking to buy undervalued assets or oversold assets, and that's two different things. I use two different indicators to determine those things. The valuation measure is this indicator right here. I have no idea who made it on TradingView, but it's a concept taught by Larry Williams. Um, it's comparing the asset that you're looking at to the price of gold in the gold line and to the price of treasuries in the brown line. So basically the thinking is if you're in a strong uptrend and an asset becomes undervalued, you should buy it. On the flip side, if an asset is in a strong downtrend and it becomes overvalued relative to gold and or bonds, then you should sell it. So I use the valuation measure here, and then I use just your regular 14 period stochastic RSI. And when it gets oversold in an uptrend, that's a good time to buy. An indicator that I don't have pictured here is a sentiment index. I have a sentiment index on Ninja Trader, which would I'd use the same thing. When sentiment gets super bearish in a strong uptrend, that's a time to be a buyer. And when sentiment gets super bullish in a downtrend, that's a time to be a seller. So more recently here in the stock market, it has been just a classic. Here we had Facebook, Meta, became undervalued and oversold in an uptrend. So this is the 39 period, 52 week moving average. I'm paying attention to these two. They're sloped up. That's a strong uptrend. I mean, you can just tell by looking at it, but in case you can't, use the moving averages. So it gave a number of entries. We had one entry happen right here, which is the change in state of delivery with the close above the high of this down close. And using the 120% of the 3-day ATR at the time of the entry. So you take 1568 times 1.2. That is the amount that you'll subtract for longs from your entry price to get your stop. So it'd be somewhere down there. There's a number of other entries. It gave a 3-bar trail entry right here, which would have been stopped out using the 120% ATR. So not perfect. Nothing's perfect in trading, but if you did happen to get in on this entry, great entry. Or this qualified trend line when this candle opened right here. So happened on Meta this week. Costco got oversold, so it didn't get the valuation measure that we were looking for. It's very close in regards to the valuation versus bonds. Nvidia gave a one entry. It gave right here was a stopped out entry. It took a 3-bar trail right here and then stopped out. More recently, we've had a 3-bar trail triggered into a long here. Today we also had an 18-day moving average entry. So we had two closes above the 18-day moving average, and we took out the high of those two candles. So that is an entry in and of itself. So silver, this market is in an uptrend, undervalued versus gold, and oversold. So look for longs. Basically, here we had a qualified trend line. So after this candle closes a down close, when price came up and touched this trend line, that was an entry. Same thing on copper. I leaned towards longing silver over copper, because if you look at silver, look at relatively. Here's May 2nd lows on silver, And here's the May 2nd lows on copper. So copper just been getting hammered. It's way weaker relatively than silver. Silver came down and didn't even take out May 2nd lows. So to me, if I'm going to long copper or silver, I'm going to go with the one that's stronger, the one that has greater comparable strength. Google, undervalued, oversold in an uptrend on the weekly. So it did give an entry here today. Google's had some bit of bad press recently. I mean, I don't know if you listen to what Jim Cramer says, but he was ripping them a new one. So maybe that's bullish. I don't know if you believe in inverse Cramer. Maybe that means we're going to the moon on Google. But here's Walmart, same kind of thing. Oh, we didn't actually get this, so this wasn't. So we just about got oversold and nowhere near to undervalued versus gold or bond. So that unfortunately that won't catch all of them. JP Morgan, nope. Microsoft, yeah, so undervalued in an uptrend, oversold. So we have qualifications to look for a long. We don't have a qualified trend change yet. There's been no qualified trend line break. The 3-bar trail right now is right here. So the 3-bar trail is, you got 1, 2, 3 of the last 3 bars, and they can't be inside bars. So 1 with the lowest close. Right now the lowest close is this right here. So 1, 2, 3. If it touches that high, it's a qualified trend change for longs. Travelers Company, this one's interesting. I mean, it's been kind of consolidating, but look at what's happened. It's in an uptrend, and it's been undervalued versus gold for a long time and oversold. So this one actually looks pretty good, Travelers Company. This one I'm not as big of I'm not going to pay attention to this. I'm actually going to take this off my list because we've had closes below the those major moving averages. I won't pay attention to that one. Netflix, uptrend, undervalued versus gold, oversold. We had a 3-bar trail triggered here. We had a qualified trend line triggered right here on Thursday the 8th. This was a down close candle that day, and then we traded up into this trend line. That's a qualified entry. Broadcom, uptrend, undervalued versus gold and bonds, and oversold. 1, 2, 3, qualified 3-bar trail entry right there. So as you can see, I mean, who knows how these are going to play out. Wouldn't trail my stops until we took out a significant high. In this case, be all-time highs. Deckers has been undervalued versus gold and bonds and oversold. Not moving as strong, but you kind of get the picture. I'm just doing the same thing for all of these. Uptrend, undervalued versus bonds, oversold. We're good to go to look for an entry. This one would have got stopped out. We had this, we would have got long here with 120% ATR. Stop would have got stopped there. So you're not going to win them all. Lilly, uptrend, undervalued versus gold and bonds, oversold. Entry would have been right up there. Manulife, uptrend, undervalued versus gold, oversold. Get long on you could use a change in state of delivery. You could use a 3-bar trail, in which case this hasn't. So this candle here today, that wouldn't have been a qualified trend line breakout because this candle was an uptrend, up close. Verizon, it's been consolidating, but we got the sloping up of the moving averages. So uptrend, undervalued, not an oversold though, so I'm not a big fan of this one yet. But that is a strategy. I think this is what I would call a dumb guy strategy. You could be of pretty average intelligence, which I probably am, and you can make money in the markets using this strategy. It also doesn't take a lot of your time. Like, I mean, you're looking at it maybe once a day for 15 minutes, setting your orders, depending on, using these different entry techniques, adjusting your orders. You just the only work really is determining the new stops, because if you don't get your entry filled today, well, then you're going to look what's the next point at which you're looking to buy on strength. And then you're going to use the new ATR times 1.2 to get 120% of the 3-day ATR. And that's the work. And then other than that, you put your entries in and you leave it alone and don't look at it until the next day once the market's closed. So I will continue to update you guys on this. I guess one thing I'll note, I use this strategy for the commodities, the futures, and then I look at the Dow Jones 30. I look at about the top 20 stocks in the S&P and the NAS. And then I also subscribe to Investors Business Daily, and they have their IBD Big 50, I think it's called. And it's basically their list of growth stocks that they've identified using the CanSlim investment model. And they do all the work for you. They got computers to do all the calculations to figure out which stocks belong at the top of the list. And that's where some of these stocks like DEC, for example, Deckers, I got that from IBD. And they just tend to be stocks that just massively just have these huge moves. I'll just go in here and see if I can IBD Big 20. Yeah, here it is. So as you will see, some of them, they're just kind of companies that I don't think I would have otherwise heard of. But if you go on IBD 20, Big 20, you'll find some massive companies that are probably worth following. So that's it. I will continue to share these videos and hope they add some value to you in your trading. And if you have any questions, feel free to reach out to me on Twitter or YouTube, wherever. And until then, good luck and good trading, everybody.